Good evening. Ira Epstein of Linn and Associates with your metal market wrap-up. And this wrap-up is for Thursday. And we're at April 1st, 2021, about 6:15 p.m. Now, I want you to take a look. See the S by these markets? They're settled. They're not going to open tomorrow. So you're not going to be getting from me a metals update for tomorrow because I can do that right now. I might decide to do one if, depending on how my day is running. We do have some markets open. You're open in the stock indices, as you can see. You're open in the foreign currency markets. You are not open in the energies, and you're not going to open again. This is where you're going to sit now until we get back to the Sunday evening time. You are open in the bonds and the notes, and the Bitcoin is trading as well. So you have these mixed pictures, and that's because of the Good Friday holiday and the fact that the stock markets around the world, well, you know, I can tell you the U.S., I don't know if they're around the world, but we won't be open because of that. Yet the banks are open, businesses are open. It is nuts how these things don't get that well coordinated. All right. So in looking at the markets, I can tell you, you know, I put out my enhanced Bollinger Band course, and I'm curious to see how traders respond to it. I have the first signal off of it since I've published the course. I mean, I've been taking signals on this a long time. And for those of you, the first signal that came in was in the Dow. You got in and you've got yourself almost 200 points in that. Doesn't mean the trade's over. It doesn't mean you'll walk away with money. And it certainly means that while it's nice to start off that way, you know and I know that there will be losing trades. All right, but it's real nice that it kicked off just that way, and that's a pretty good gain. If you haven't seen anything on my enhanced Bollinger Band course, I think you can go to our website, take 2 seconds out, go under the word education. It's at www.iraepstein.com. Under the word education, you'll see it. I've done a video to explain everything. It's all there, inexpensive, and away you go. Okay, so we might as well go through the gold because why not? For the week, we're going to finish down about $5.80, 0.33%. Not a very big break, but still staying under the 18-week average of closes. You can see how the market's coming back in to fight into this resistance zone. And you know, it's always nice to look at this and get a feel too. If you take a look at what the market did, you had a break, you came back in, you challenged that area. Sort of like this, you didn't go anywhere. You came down, you came up, didn't quite make it into the area up here, came down, came to here, nowhere near the bounce back there, but now you're coming into this area. I point that out because these are the type of challenges you look for to see where the market's got resistance. Should we get through 1744.80 for the first time since this wave of breaks has taken place, what would that mean? It would mean that the market's finally getting to the point where it's tired of the downside and the pattern is changing. Doesn't mean it's bullish, but the pattern would be a change, and that would be a call that maybe that short play is over. Going home for this weekend, you're over the 18-week average, which means the bias is up, the trend is down, so everything's fighting with each other. You had hit earlier in the week the lower Bollinger Bands. I try to explain to you the first time they're hit, the pros take money off the table. If you want to play, they're going to keep doing these trades, God bless you. Go for it. But more times than not, they're going to look like this. So for you to get that 1 out of 8, 9 times that it does that, okay, but how much money do you leave on the table trying to run with that? So I came up with a way in my enhanced Bollinger Band course to try to catch those, but I'm not going to spill the beans here, so I've got the course. When I look at momentum, momentum is now neutral, maybe pointing a little up. So I call the chart neutral. I call the chart trying to go sideways for a change right in here. We're out of this pattern of this big break. Till it changes, we'll see what goes on. In the gold-silver ratio, looks to me like that 70 level, and I've been pointing it out to my morning subscribers, the people that see me in the morning as I do the futures, that I thought the 70.3, 70.06 was going to be where the market ran into the resistance, and it did. Look at your weekly chart. Go look at it. You'll see what I'm saying. In the silver market, you've got lower highs, lower lows, and very simply put, When a market comes down, often the 200-day average, as I'll tell you, the 100-day will offer layers of support. If it gives ground, you go down to the next level. You came here to the Bollinger Band, the 200-day average. You tested it out. You can see that. And then the market started reversing. So what was support on the way down is often resistance on the way up. Like the gold market, should we start taking out 2533.5, we'll have broken this down wave that we were in. Doesn't mean you're in an up wave, but you've ended that leg of the downside. The silver market is what I call the psychiatry trade. As traders are trading in these bands, they keep looking for follow-through, and they generally don't get them. When we take a look at the platinum, platinum is one of the markets along with palladium that I think, those are the two that are getting more fanfare to the upside. Higher lows, higher highs, momentum up. This market's in a buy configuration. The resistance, as I see, it's 1226.90. You'd have to get back under 1153.20 to tell me the market doesn't want to continue with that. In the palladium, what the market is doing is staying over the 18-day average, keeping the bias up. This arrow actually doesn't belong there. It belongs pointing down. You have lower highs, lower lows, and momentum, which is now back in the overbought condition. A very difficult chart to work with. We then come to the dollar index, and the dollar index could roll over come next week. Now, if it rolls over, you'll know that because you'll get the red line closing under 79 for at least 1 or 2 days. Without that, this is just a correction that could go back to the upper Bollinger Band. Who has control of the market going home? The bulls. Until that embedded reading is lost, you don't anticipate it's lost. You anticipate the pros are buying. Remember, we're going to get jobs data tomorrow. I don't know what they're what it's going to look like. I know what they're looking for. The trade, even with Good Friday, that report comes out, and they're looking for 1 million jobs to be added. Last, the Ethereum contract, Ethereum, whatever you want to call it. The trade is calling it Ether, but Ether's another product. I don't like calling it that. Higher lows, higher highs as of right here. That called for a move, if it's going to go up, to the upper Bollinger Band. Went there, and you can see what it's doing. Now, is this market trading tonight? Yes. And as I said, Bitcoin is trading. So the CME group on parts of their Globex have certain things open, part not. This is open. Hit that number. I look for the pros to be doing their profit taking. So again, I'm Ira Epstein. I'm not certain I'm going to do weekend videos or not. Depends how my day goes tomorrow. And yes, for me, it'll be another work day. You have a great one. I will talk to you all either tomorrow or come Monday. Take care.